Okay, so have we bottomed? Yes, today was definitely a headache day. So, have we bottomed? I'm going to show you the two charts right here and my current analysis. First, using classical divergence analysis, if I just take the RSI, which I think I already have on, yeah, I have the RSI of the Dow Jones Industrial Average versus the S&P 500. Now, take a look very closely. This one's not too obvious, but you see that we have an intermediate low right here, an intermediate low right there, and then we have another low right here. But on the RSI, this fails to go as low as it did before. Okay, so that one's not too obvious, but that one is called bullish divergence. And this normally happens a lot at major bottoms. So it's not too obvious on that one, but you see it's much more obvious on the S&P 500. It just jumps out and screams at you on the Nasdaq, and as well on the Russell 2000. Where's the Nasdaq? There we go. So yeah, definitely an intermediate bottom. So what is going to happen if this is actually the bottom? Standard analysis would say that the second corrective wave of the movement, or in Elliott wave terms, the fourth wave, that's where the correction will most likely end. So if we we will do just the S&P 500. So I already did the wave labeling right here, so it goes 1, 2 down, then 3 up. I mean 1, then 2 up, then 3 down, then 4 up, and then 5 finally down. And something to notice is that the distance between the bottom and the top of the first wave was about 60 points, the same exact distance as between the top and the bottom here. See, top 1330, bottom 1270, exact proportions. Now this one's a bit off the one in the middle, but it's an extended wave. So we're looking for a target within the fourth wave. So that means that we expect the S&P to correct somewhere in this box. Of course, it's already there since the fifth wave was very short. So where do we actually expect it to break down again? We expect it to break down around 1327. 70 on the S&P, because that's a 38.2 retracement. On the Dow Jones, the same corresponding retracement would go to about 12,537. It says 532, but you know, in that approximate range. So we have that. Okay, so next step, what would actually invalidate what I am talking about and actually say that we are in a new bull move? So the idea is, if this would, and this actually isn't too good of a scenario, but if this would retrace all the way up to 1423, that's the only way that the scenario would actually be invalidated at this point. So for those of you short, I'd probably advise putting your stop somewhere around this level on the S&P, because if it doesn't, it'll at least get to 1364, and perhaps you could re-enter your trade there. And if it breaks above this level, you just need to get out. But yeah, as far as taking a look at the studies, RSI, we definitely had enough divergence to signal a short-term bottom. And you can actually see where our next resistance level is going to be just by looking at this, which it looks like it's right about to run into it. So what kind of correction do I think this is going to be? I think it is not going to be a very sharp upward correction because, well, that already happened. And if it took 2 months to make these 5 down waves, we can't expect another day like this where the market's just going to reverse at 1327. So a 2-month correction doesn't, I mean, a 2-month major movement doesn't deserve a, 3-day correction. So what do I think it's going to do? I think it's going to form into some type of triangle formation where it will do one of these kinds of things. So it'll bounce up against this level, go back down, bounce up again, and we'll have a pretty inactive June, to be honest. Okay, so there's all my predictions for now. Those are the analysis, stops above 1327, and stick to the plan. All right, happy trading.